Welcome, everyone. It is Sunday. I already hate this time. I would already be done right now with the stream. We're in Arizona here, and we don't change our clocks like the rest of you do. So believe it or not, it's worse not to change than to change, because now everything I do every day is at 4 o'clock instead of 3 o'clock. So anyway, I'm here. We'll see how it goes. Just want to remind everybody, the seminar is upcoming. You will be receiving a link here. We're putting some final things together. So you'll probably get a link on probably Tuesday or Wednesday, those of you that have already signed up. And we'll be getting that information to you very shortly. So don't panic, it's coming. And we'll make sure we're working on setting up a website where you can get logged in and do a couple things. We'll see how it all comes together. Kind of piecing things together. I spent a big piece of my weekend working on the seminar, and it keeps growing. It won't end. So every time I think I have a section done, I find 3 or 4 more screens to add in. So it is what it is. Looking forward to it. It's going to be on Thursday. Now we've announced a time for Friday's start, and it's going to be much earlier in the day. Originally, I thought Friday was a holiday. It is somewhat of a holiday. The banks are closed on Friday, but there's really still, the markets are open. So that's the way that goes. So let's go ahead and get into tonight's. So just real quick, if you haven't signed up, go to kendallreport.com/event, and that will get you in. I think I was saying events with a S, so you can now go there as well. We added that URL since my dyslexia showed up to put an S on things. So anyway, let's get into what's going on here in the market. So we had, what a week, right? S&P up 5.9%. The NASDAQ up 6.6%. Russell up 7.6%. So the year-to-dates, we were down to around under 7% on the S&P, back to 13.5%. NASDAQ at 28.8 now, and the Russell flat on the year, zeroed out. So all the losses on the zombie stocks were recovered, and so everything snapped back. We saw the 10-year plummet to 751. I thought that was a crazy number to even mention, and it went right there. And I warn you folks all the time when I mention these extreme numbers, a lot of times the markets will just go straight to it. We're looking at, think about what happened last week. There must be a million, now there's probably millions of videos on YouTube right now telling you about how real estate's going to collapse and everything. Real estate top performer, up 8.9. I've been telling you it's probably going to slow down a little bit. Not sure about a collapse, but we're definitely seeing some slowing there. We saw mortgage apps, which will come out, it comes out every week. They'll be out again. They were down 2.6%. But then we look at everything else. Financial, consumer, discretionary, just about everything was up anywhere from 5 to 6%. Even energy, as bad as it's been, managed to throw out like a 2.9% return. So everything caught a bid last week. There was, the algos were looking for anything that looked cheap, and there was a lot out there because, as you recall, our database was way down at, I think, 11-12% on the short term. It's rebounded back over the 42%. I'll go through that here in just a minute. And then we've got, we had unemployment come out on Friday as well. And we'll kind of recap a little bit more of last week, and then we'll dig into expectations for this week. But unemployment came in at 3.9. It was expected to be 3.8 on change, so it increased a little bit. We saw payrolls down to 99K, and really, I guess we'll say it's softening. Are we going to get negative numbers? It's possible. I'm going to dig into and do some of the long-term outlook tonight, as I always do this first week here. So it's probably going to be a while. Like I said, I already hate this new time. I'd be finished probably right now. Instead, I'm doing this. So I don't think I'm going to change go to 5 o'clock because that's only an hour after the market closes. I need a little bit more time and recover after a day of trading. So we'll go from there. Let's look at what's coming up next week, this coming week, and we're looking at there's nothing on Monday, so we'll be operating on sentiment, and I'll be going through some of the technical details here in a minute. And we did get an RTX sell signal on the weekly market grid, so we're looking at 1 to 2 weeks sideways here. So that seems to make sense, although there still looks like there could be a little bit of a bid, but we should hit some pretty good resistance that I'll talk to you about here in just a few minutes in the technical section. So we got on Tuesday, we got the trade balance coming out. Not sure that's a big number, but it's coming out 61.58 billion. Consumer credit at 12.08 billion. I'm not sure. I'm sure there'll be some stories conjured up around there. Consumer credit is expanding or whatever, and it means that the consumers tapped out. So you get all that stuff. I actually think it's sort of kind of funny to predict. I've been around a long time to try to predict the spending habits of Americans. That never seems to be a good metric to grab onto and try to predict what that means for the economy. Everybody got their special deal that they watch. I kind of just look at the numbers and go from there, look at the charts, expectations, and then see if there's anything material coming out from that standpoint. So, apologize if you hear the siren. They're not coming for me. There's been a lot of activity on this highway that I'm not too far from today. There's been several accidents out there. So let's go into a little bit more detail. Let's go mortgage apps. I mentioned expected they were down 2.1%. I still expect those to come in a little bit. Claims on that's Wednesday. On Thursday we got claims coming out 223K expected, continuing at 1.818. I really don't care about this number unless it gets back over 2 million. If it gets above there, then maybe it means something. If you recall, back in the pandemic days, we were pushing 2.3, 2.5. And just so you know, the claims numbers, if you were talking recession, you're looking at probably a 350 per week number, maybe greater than that, 350, 400,000. We're not anywhere near that. And I told you, I mentioned that the other day. I'm going to tie everything together now. When Powell was talking at his conference the other day, he was making it clear that the immigration has affected the employment situation. And I'm thinking, what immigration? You know, the illegal immigration, the border being open, maybe so. I'm not sure what he was talking about, but there's definitely an effect of millions of people coming into your country, and maybe, I'm not sure what these metrics are all about here, but he made that comment. It kind of caught my ear on that. Let's move on to Thursday, claims on Thursday, and then on Friday we have only the University of Michigan consumer sentiment expected to be at 65. So for the most part, what we're getting in economics this week are pretty light, and this is a more typical week after an employment number comes out. Usually it's almost a void of any material news, and I would argue that's what this week is that we have coming out right now. So I would expect that market sentiment will be driving the markets, but that's also something else to discuss as well. So let's try to tie together the whole Fed scenario. We watched the 10-year drop to 751. I mentioned that, and we watched everything come back in. That caught a big bid in the markets. They were buying anything and everything, and there was virtually nothing got missed. If you go through the sectors, we'll go through the sectors tomorrow night, as I usually do when I go through the portfolio expert dashboard. We'll go through that tomorrow night and look at that and see how that all washes out. But the Fed held rates. Markets absolutely believe they are done, finito, no more. Okay, The key element, and I keep telling you, I don't really care about the rates as far as them. They're not going to drop anything. Even if they would have raised rates this time, probably wouldn't have had any effect. We're running right around, I believe, 530 on the Fed funds every day, roughly in that range. And so, like I've been telling you, the front end of the market's going to stay higher, and then we're going to see a flat curve on the back. So 2s, 5s, 10s, 30s are going to be pretty flat in a range. And with the 10 dropping to 450, that's pretty good. I think we're going to get a rebound from there. I'll show you that as well here in just a minute. I'm just looking at some of my other notes here. And I would argue that the only thing that matters going forward with the Fed is the QT. And Powell made it extra clear that they haven't even discussed changing the QT and the roll-off and all that. So we'll continue to see, even though the Treasury downsized their offerings that they're going to do here in the next couple months, that is still a factor, but the Fed's still selling. So the two big sellers in the market are the Treasury and the Fed, and the Treasury raising new money and the Fed trying to raise money as well, sucking money out of the market. So it's going to be really interesting. And I don't expect to see anything, but I would expect that at some stage, maybe in these daily repos and stuff, that reverse repos they're doing, maybe watch that number. We'll see if there's anything that comes out of that. It's been fairly stable in a range of daily operations every day. So I would set this week up as kind of a neutral week. I'll show you here in a minute. We've got a lot of, we have the RTXL signal weekly. We've got other things that we need to consider here from a technical standpoint. As I mentioned, the database, which we'll go through next, has bounced back a bit. So everything's stabilized just in a moment, right? So we see this kind of action all the time, and we get down to that extreme. If you look at the contrast from a week ago Friday versus this most recent Friday, it was night and day, because we were printing down at the lows. Remember, we were printing week before last, we were printing down at 41.22, and we're playing around with 4,400 all of a sudden again. And so we'll go through the detail, but I think somebody mentioned, even on Twitter or somewhere, I saw it around the channel or Twitter or somewhere, that somebody had mentioned, and we've already hit that Fibonacci target 2 that I talked about the other day, and those numbers seem far-fetched, but here we go. We're right into it. So let's go ahead and get into the technicals, go through the WaveTech database here. This is the only day we'll be up to speed and all that. And I just want to make, before I move on, I want to make a quick announcement that there'll be a stream tonight, Monday night, Tuesday night, Wednesday night. No Thursday. We have the seminar, and Thursday and Friday. And next week, the week of the 13th, I am gone. I'm not going to be here at all. So just know that is happening. So all of those things are going on as well. So it's a very busy week this week, and then I'll be out the following week, and then I'll be back the week after that. So let's go ahead and get into the database. All right, so we'll start with the daily database here. And daily's had quite a few buys, 5,085 buys for tomorrow's opening, only 84 sells. We moved up quite a bit from the 20 handle all the way up to 44.59. Not a we'll go, like I said, tomorrow night we'll go through all the sector rotation on the intermediate, but let's go over and just take a quick look at the intermediate here. You can see here that the buys and sells are right here. So we got 2,308 buys, 168 sells. All of these ratios over here, the sentiment was all bullish on our database, as you would expect. So we saw some traction during the week as the market was turning around. And then this is just a big burst on Friday. They were able to print them up. Yeah, I would say the bulls are pretty confident. But when we get signals like this, by the way, we get 5,000 new signals. Not every signal is going to work, but when you get this kind of tranche of orders, typically will carry through for multiple weeks from a standpoint of an underlying buying type scenario. You'll see in the technicals there's some bit of downside risk here, and we'll see how everything sets up. But let's go ahead and take a look at the weekly. So weekly, it bounced back to 39.6. It was down around 32, not quite over the 42 handle, but they're certainly got a lot closer. And depending on how this week plays out, we'll look here in the technicals. I think we'll probably start to see this thing climb back into a 42 handle. And I'm not really all that bullish. Last week was pretty impressive, but it does look like that we have kind of an upward bias building here as we're setting up coming into the end of the year. So what I'm going to do here next, let's go ahead and get into the S&P. We'll start off with the hourly chart. Hourly is looking like it's trying to roll over a little bit here. Looks like it can roll over into London. So now my screen, these times reflect Mountain Standard Time, no longer Pacific. So the London Open will be closer to 1 o'clock on my local time now. And that is pretty much what's expected. And I see somebody mentioning earnings are over 70% above expectations. And I usually talk about the earnings every week. This is really classic that they're anywhere from 65 to 70. And I always talk about this because is there everybody understating so things look good so you can catch a bid? Every earnings season's like this. I'm telling you, for decades I've been watching this. And that is really so consistent that we see an overperformance. And I think it's just even I always joke, analysts are that bad and the company's guidance is way understated. And that way they can catch a good bid. And every 3 months they got some stability because, they outperformed, all that kind of stuff. So let's take a look at the hourly here. Hourly suggesting it's trying to roll over here. We really didn't get any, what I call VIG, any big momentum growth here in the PPM 2 or 3. It really is quite flat here in spite of the rally that we saw. We got on Friday early on, we got RTXL signal. We kind of went sideways for a couple hours, printed back up to the upper range of the market grid. And then as we came into roughly the end of the day, is that we're coming into back into the moving averages, and it's probably looking like a couple things that I'll talk about here when we get into the weekly charts and the like. Let's go ahead and go into the daily and get the market grid set up. A couple things of interest here. We got 5 green bars here, and we kind of got this basically, it was a 5-2-3, or you could, depending on how you want to count this, but basically this was a pretty decent pattern that we got down to 41.22. That fib target was 41 even exactly. We had a whole cluster of numbers, if you remember, between 41.40 and 41 even. There was a cluster right here at around 22 to even. And so we bounced out of here. We had 3 fib targets that are up here on the dailies, and they were 43.17, 43.91, and 44.37. I'll show you here on a weekly chart here in a minute, but it does appear that we've got a shot at the 44 handle this week, whether it happens right away or it's they unfold as we go through the week. But there is a shot here to get up into the like I said, the high Fibonacci target's 44.37. I'm going to show you, I think there's a 44.20 handle that looks like is pretty likely. You can see we have basically a day or two sideways, and then we should see a little bit of a rally. Whether we get this rally as we come into the end of the week, it'll be interesting. All of the PPMs are expanding here on the daily, and somebody was mentioning they're concerned about the weeklies. The weeklies are, I'll show you here in a minute, are fine because they're really just setting up this top end of the range. This is what we're seeing right now is a retest of the October highs. We got up to 44.30 on this high here. I'm just searching for the highest. Yeah, 44.30 looks like the high in this range here. So we're back retesting that. I suspect that we trade back into this pattern before we go higher. So we look at the market grid for Monday's overnight and Monday. So far we've had a 77.83. S1 is 58. R2 is 44.12. There's a 93 number here as well. We printed up to 91. I suspect if we print above Friday's high, we'll probably print into that potential 44 handle, and we could see a number here. 44.12 is R2. So R2 S1 is likely, and as always, I would use, if S1's taken out, then we're 44.39. I don't think we get that week, but that would put us back toward the 40-day moving average, which was right now at 43.45. So let's start to dig into some of the intermediate and longer term look here. So here's the big reversal last week. We got the close. The STX high was 42.97. We closed 43.76. So way over that number. Now what we should get, the market grid turned up. I talked a little bit about this last week on Sunday night. Probably get a market grid set up, and then we're looking at a couple things here that need to be watched. We've got the PPMs are still negative on PPM 1, so there's some downward pressure. We could easily come back towards this 40-week handle, 42.87. So just looking at the market grid, this would be my expectation. Here's the 22 number I was mentioning. R1 on the weekly is 42.22. S1 is 42.29, and the next number down, S2, is 42.76, which aligns itself fairly well with that 40-week moving average, which is going to be similar to the 200. I'm going to flash over to the daily for a second here. I just want to pull out that 200. 200 is 42.73. So that's exactly what it is there. So back to the weekly chart, we probably could set back into that range on a weekly range, but easily here, folks, you got R1 22, R2 on a weekly is 44.75. That would be a pretty big number. That would take out that October high. But overall, the pattern, if we look going all the way back to July when we were printing into the 46 handle, we're really still just doing a retracement here, and it looks like things are going to probably stay. My expectation would be to stay around this 44.22. with the possibility of 4270, 4280 range, somewhere in there. And I would use the market grid numbers here on the weekly to set this up. But decent reversal. We've seen this before. We're probably going to fill in a couple weeks here. As we come into, this is something I've been talking about, is we get through this second week, we get into the third week, we start to see some acceleration possibilities coming into the trend, and possibility of ultimately maybe moving up to into low 45 handle and beyond. But I think for right now we consolidate here, and we won't know until we come into next week that how much we're going to get out of this range of the 40 period and the 21 period. All right, so let's dig into some longer term stuff. Let's go to monthly, and I'm going to switch over here. Right now, I'm going to go to SPX. I'm going to go to the cash, only because there's not enough data to calculate the algos. This will give us a better expectation on the algos. And this is something, going back, if you went back and watched last month's video, it looks like we're setting up a range here. We still have a downward channel on the monthly, and it looks like monthly is at least holding this upward slope here on the 10. Now, PPM1 is a plus 0.66. Anything over 0.25 is a valid trend. And so we're looking like we're probably going to try to stay above the 10-period moving average, 4281. And that kind of brings us into kind of retesting that number on an intra-month basis to that 4276 number. There could be a 4240 in here, but I think for the most part, I think we'll hover around this line. But if you look at some of the other elements here, the PPM3 is starting to fade, and it's starting to lose momentum. So there's plenty of work to be done in this market. I know I've seen people, all kinds of folks, talking about fourth quarter rally, ATH come in, all-time new high, all of this stuff. I'm not sure that's in the cards right now. There is an upward slope here. We could see the market grid turn up when we come into December, but for right now, we still have a lot of resistance overhead. So take a look at the market grid on a monthly basis. 4260 is R1, so that's a fairly realistic expectation. And S1 is 4127. So far, we've had a 4197 low for the month of November. And last month we did print right down to that rising 40-period moving average, and it was up. If we look here, the 40 was 40.89. We got down to 41.22. Actually, this is cash now, so we get down to 41.03. So right down to basically that upward sloping moving average. We bounced off of there as we came into November, and now we still have this downward slope to deal with, and we're looking at like extremes around 44.08. This is cash numbers now, 44.08 and 44.74. So there's definitely plenty of overhead resistance. We're no ways in a way of a big runaway market, and this thing's just going to turn and go vertical. It looks like we have upward bias, but we're going to have to work this zone a little bit harder here on a longer term basis. So as always, let's go in and look at a quarterly chart, and this runs us into December. And I'm going to show you these numbers again because this is a new quarter, and when we came in this quarter, Fibonacci targets, folks, you're setting down 61.18, 71.21, 77.43. So let me just clarify something. This is, each one of these bars is 3 months. So to get to Fib target 1, you could be talking 2025 and beyond. That could be 5 or 6 bars. So easily a year and a half to satisfy this. But when we look at the PPMs, what we're seeing is the momentum is trying to fade, but it's still very robust. PPM1 right now is at 0.14, and then it's looking like maybe it upticks a little bit in December, and then we see a pretty monster decline. So I think what's probably going to happen here on a quarterly basis is we got a downward slope on the market grid, and the market grid, like I said, here we are, R2 on market grid right now is 44.84. We're printing R1 basically as we speak, 44.84. We printed 91 last week. So S1 41.95 and 43.80 is S1 R1. R2 would be 44.84. I think that's a reasonable expectation to get to potentially print up into the mid 44 handle. And then it looks like probably as we come through December is kind of going to be a climactic kind of deal. We come in the first of the year, we might see a bit of a turnaround, but that's the best I can see right now. But this is interesting because on November, we got some those Fibonacci targets, which are ridiculous to mention. But as I told you, I always do. But what I look for here, and this will be gone into detail when we go into the seminar this weekend, what I look for here is, are we getting confirmation from the slope and the numbers that are coming out of the PPMs that suggest that this kind of pattern can set up? And there is a very serious argument here that we could see a decent decline in sometime starting in 24 to 25, and whether maybe that's the long advertised recession that's coming into play. But there looks like there could be some negative numbers coming into 24 and 25 if you can forecast out this far, because the numbers would put us down, taking out the lows that we did over here, back at 34.91. That means at 35.02, I believe, was the futures low, that would be challenged at some time, and that would not be probably until late 24, or maybe something to do with the election. Who knows? But these are really long-term forecasts, and this is the possibility that could come in. And this could be one of these, what I call an island projection on these three green dots above here, this Fibonacci numbers I just read off. Those could end up to be really just what I call an island projection. We get one bar, and then depending on how the bar that we're in right now or coming into December, that those could be negated pretty easily by taking out some key numbers in the pattern. All right, let's go on to NASDAQ. I'm just going to stay with this quarterly chart. This is also interesting. I don't have the benefit of having the algos working. There's just not enough data. This is the futures, but we'll just leave it like it is right now. But we can definitely see potential of a right shoulder setting up here, and there's a lot of danger in this type of pattern. And I'm just going to draw in something, and someone's going to say I'm super negative, but I'm just acknowledging what's possible here. You can see we're still, PPM1 is still plus 45, PPM2 is very robust. So let me draw in a couple things here to show you exactly what's going on here. So this could be the right shoulder pattern, and then we come back in and we challenge these rising moving averages. Once again, this is 3 months. Look at this. I'm going to draw this line up. This straight line up here is 2026. See the numbers down here? This chart's going out to 2038. So what we are seeing, though, is a decel on all of the PPMs. Like I said, I don't have the algos in here, but it's clear that this thing is starting to decelerate. We've got the market grid turned down here on the quarterly. So I would suspect that we'd have to take out this high here on this bar for us to get any kind of a bullish situation. And I'll show you where the market grid would actually start to turn up. We would get a market grid to turn up like that. I think what's better, most likely, is we're probably going to get some kind of channel that comes into the 21 period moving average that's rising. These are all rising. And folks, we're talking about years out in the distance here. So let's just keep that in mind. Let's go and take a look at the, let's start to hone this back a little bit. This is also interesting. This is coming up. So on a monthly, on the NASDAQ here, we've got Fibonacci targets to the downside, suggesting the 200-month moving average is the extreme. Look at this. Low target 1, 97.80, 73.79, 55.97. So you're asking me right now, which one do I pay attention to, those upward targets on the S&P or these downward targets here? And what I'm going to tell you is we still have PPM1 2.13, this monthly charts now. And so this would take multiple months, once again, probably a year and a half, 12 to 18 bars, to even start to formulate this. And we'll see what kind of numbers we have. PPM1 is at 2.14, and that average right now is at 14.415. So far we've had a low of 14.410. So we've already bounced off this upward slope. I'm willing to argue here on the monthly that we're going to stay within the market grid, see what we come up with when we come into December. So let's break it down, go to weekly. We're doing a top-down analysis here. Weekly got the RTX sell. We should go sideways. Look at these downward slope numbers here on the weekly. So I was talking about us trading between the 40 period and the top moving average in this pattern, which is the 21. That's 15,166. We got up to 15,202 so far, and the low at 15,172, and the 40 period moving average at 14,200. So we came just above that. Market grid has turned up on a weekly. What I would look for is for the market grid to probably turn down just as we come into next week and start to see probably a consolidation range. Most likely, let me get my drawing pen out again while we're going through these longer term stuff. We're probably looking at a potential here for this being an ABCDE fourth wave. We got this upward slope here. These are pretty positive numbers, but I think we still get sandwiched where the markets stay in this range here. This is what this is telling us: stable, slightly negative, just telling us we need to stay within this kind of this target range that I'm drawing in here right now, kind of this wedge right here. That's where we're likely to see markets kind of settle back in. Ultimately, market grid probably does something like this, and we start to see the pattern of the market grid where you get the contraction, because it really, at the moment, it got fairly big on this. You can see this range right here. I just drew a circle around that, all of that just kind of in this range. So it could be an ABCD, it could be an ABC and its X wave, and a double three, which means we get another ABC. That's probably more likely based on what's going on here. So finally, but not lastly, let's get into the daily chart. So we we did a top down. We went from quarterly, monthly, weekly, and now let's do daily. Daily shape just like the S&P. We got maybe into Tuesday, maybe a move back into this range here, back into 14,950, maybe a little bit lower. Looking at fib target 2 here is right now at 15,356. And there is a bit of a forecast for the possibility of keeping some slight upward bias as we come into the week. But I think we end up trading, because of that weekly RTX sell signal, I think we trade sideways into this moving average. There might be some upward bias, but just looking at the news, it's so quiet this week. I did not bring up the earnings that are coming out, so I'll probably do that tomorrow night. All right, off to RTY, the Russell. Look at this rally. It went all the way up to some of these Fibonacci targets. It hit fib target 3 here. 1771, we printed 17. Let me just get the right number. We printed 1779. So we did get fib target 2, 1752, 1771. Like I said, all these numbers seem somewhat far-fetched, but it still looks like what we're likely to do is set back into this pattern, whether we can print a slightly higher high in here and then we start to print back. That's what it looks like to me, that we could really just settle in a pretty nice channel here on the market grid, but I think this is going to turn down and we'll look for, at some stage, some kind of rejection out here. I don't think we get as high as the 200, that's 1840. Take a quick look at the weekly and you'll see the RTX sell on the weekly. So all three indexes, the S&P, the NASDAQ, and the Russell, all got RTX sell signals weekly, and it just tells us we should stay within the range. So R1, S2 would be the range here. R1 be 1791, S2 1716 would be pretty much what would be expected here. Now, I'm not going to go into, well, let's go ahead and do monthly here. The monthly just reveals a pattern I've been talking about for way too long, but going all the way back into May of 22, and we basically have been in the same range here, looking at 1698 with a high end around the 1840. We did print up over here just a bit higher, all the way up to 2000 for a minute, and then we're right back in. But this sideways range, this consolidation just kind of continues. And I really think this has to do with, when we go through the interest rates, this has a lot to do with how the yield curve is positioned. The back end of the curve is causing a lot of stress in the zombie companies. There's many of them in 24, but 25 looks like to be a place where a lot of refinancing is going to have to be done on these things. And yeah, I mean, everybody uses IWM for the cash and trading. Absolutely. This is just futures analysis, which I usually stick with on all of this stuff. But you probably see the same thing. I'll actually bring that up. I mean, it's basic same pattern. And like I said, my expectation is this is monthly, that we'll see something turn back up on that. And let's go to yeah, so everything, I just want to look at the flashback to the dailies here again. Looks like to me, it looks like we probably get a mini setback for a day or two, and then an attempt to whatever the high is on Monday. If we can print through the high that we printed on Friday, I'm looking for a rejection here somewhere at that R2 level on all of these indexes. Watch that number really close and look for some type of indication we're going to get a reversal, maybe off an hourly chart or something like that. But I think we get some rejection off of these levels. We ran pretty far really fast, and I don't actually talk much or believe much in this oversold, overbought kind of thing. But I do believe in prices getting a little dear, and this is what we're done here from this standpoint. But overall, there's still trends involved here where PPM1 and PPM2 are trying to expand over the next 2 weeks here. So that is likely to continue. Let's go ahead into the treasuries. All right, this is pretty phenomenal. This is the daily. We were seeing these Fibonacci targets, and we were seeing the algos projecting this weakness. And sure enough, I thought we were going to hold some of these values, but we did not. And all of a sudden, we went right down to these Fibonacci targets here on the 10-year. We got down. The targets were 462, 450.6. and then 4.42, and it does look like there could be some more weakness. We could end up printing down in this 440 range, and that's pretty phenomenal. Let's take a look at the weekly chart. But here's what we got weekly is we got an STX buy, the inverse of the indexes that got RTX sells. So we should rebound back into this range. But if you look, this is, I think, really interesting, is if you look at what the algos are suggesting and that this thing is going to roll over, I still think we managed to stay above the 455 level. We get back above there, we probably get back in the mid, maybe 465, 470 handle, and then we probably consolidate. And then if you look at what's being projected as it come into year end, is a lot of softness into the interest rates, and if that happens, that's probably going to create a bid in the markets. So the bottom line is, this is the weekly forecast. We're probably going to hover right around there. I'm shocked, I really am, that I knew we would test this level. Didn't think it was last week, but it happened. And you know, market players, I mean, people. There's probably a lot of pent-up demand here, and a good friend of mine has been long TLT forever. Finally, pulled the trigger and said he was wrong, right at pretty much at the high. So you know when somebody gets caught at that level, and the psychology takes over you, that you want to go public and just tens of thousands of people that you're wrong. That's pretty devastating trade. Of course, that was the best buy signal you can get when those things happen. And so, but this is, the forecast is for more dissipation of the uptrend. We're still looking at positive numbers as we come into late November, early December. Positive meaning the upward slope, that angle of attack is still positive. But all of that's going to do is set up a consolidation up here. Whether or not, and I think in the end, we don't get that much weakness, and it really shows up right here. I'm going to go out to the monthly chart here. Really what it looks like, the forecast is that somewhere around where we are right now on a monthly basis, that everything stabilizes in flat lines here. I mean, the forecast I'm going out here is looking at 4% even. Yes, anything's possible, but there's really, what is likely to happen is we're going to stay above at least the I'm going to say 435 is going to be the extreme, and we're going to bounce around in here. But this is where that back end of the curve starts to come into play, and we start to flatten out across the entire curve. Let's take a quick look, and this really shows up here on the 2-year. Let me go out to the weekly where we can see this. See, the weeklies on the 2-year is rolling over. In fact, it's showing that we're going to get into negative numbers from a trend standpoint, that we're going to get into a downtrend. And looking at the 460, something like that, but this comes into line what I've been telling you. 2-year, 460, 5-year, 10-year, all right around that same range, plus or minus probably 5 basis points. And then the 30-year will be elevated by probably another 10. So all of a sudden you got 475, 450s, and maybe 440 something on the very front end. Like I said, the very, very front end of the curve where the Fed funds, T-bills, up to 1-year bills, 13-week, all that stuff's going to stay probably printing over the 5 handle for a while. The Fed's going to hold rates where they are, so that's going to keep that very, very front end elevated there. And it will be interesting as we come into the December meeting of the Fed. All right, so crude oil next. Crude oil continues to be under pressure. We closed under the 21-period moving average. Momentum is just is hugely negative. PPM1, negative 0.52. We're in a downtrend. This is a weekly intermediate trend. So there is potential to get all the way down back to, I've been talking about 75, 80. We'll see how we act when we get right to this 77, 75 level, see if we can get any bounces off of there. It looks like we should be able to stabilize somewhere right around that number and then set up a sideways. But the forecasts coming out here are really suggesting a pretty drastic downtrend, pushing us down maybe closer to 73, 70 bucks. And whether that's demand destruction, whether I'm not sure what's going to cause that from that standpoint. So this is going to be most likely a continuing trend. I'm going to go over to monthly here since we're doing more of a longer term. This way, every time I look at the weeklies, it's pretty negative. We've got major support again, all the way down to like 72, 73. I don't think we get much below that. The monthly charts are suggesting that we're probably going to get a little bit of strength as we come into February or so. Maybe we'll get down and they'll try to buy back the SPR a little bit. Who knows what the patterns are going to be. Yeah, not only that, Ackerman's trade was pretty epic, actually. He caught that thing about as good as you can. That's for sure, especially with size position. That's pretty impressive. Yeah, so the one thing that's still hanging out there, just want to bring this up, is we still have kind of a upward slope here. There are some fib targets up here, which is ridiculous, I think, at 160. But I've seen these kind of projections before going way back, and we got to some of these numbers. But I don't think that happens. If that's going to happen, then the only fundamental thing, you know what it is, that there's a huge disruption of oil out of the Middle East. Suez Canal gets shut down. Something goes on big. And I won't speculate on that, but I don't think that's going to happen. It does look like, though, we have stability. I don't think we get much under some of these numbers here, which is like I've been kind of advertising and suggesting for months, actually around 75, 73. I've lowered just a little bit more expectation from that standpoint. Stick with the monthly here on gold. Excuse me. And what we did get is we got an RTX sell signal on gold. We should get some sideways action. I think we probably come back in to this range. I've been talking about 1950, 1940 range. We'll go to the weeklies to try to fine tune this a little bit. Let's go there now. Weeklies suggesting that probably back to a 1955, 1946 level. I don't think we get much below that. If we look at the market grid for this week anyway, the extreme is 1938. We got S2 68. We're printing right now at 95. So we're really just kind of sideways. You look at R1 2013 and S2 1968. That's probably around the range we'll get, depending on what kind of numbers come out this week. All right, finally, we'll cover Bitcoin. Bitcoin continues to hang up in that upper end of that range. We did have a hit on the 36,346 was fib target 3. We got up to 35,968. So we got, what, $46 off of that target. And that was last week. Let me just double check here. Yeah, we got 35,043. Last week we got 35,968. So yeah, we just $100 off of that thing, rough numbers. And so what I've been talking about, you can see that momentum is staying up on PPM1. So we should see a sideways move into this angle of attack, probably somewhere here around 34.6, maybe 3,300. We should get into that range right there. And that looks like the whole deal right there. Let's take a look at the daily. You can see there, it's interesting because I was telling you that I'm going to go back to the weekly. If you look at this pattern that we have weekly, this is what I've been telling you. We go sideways into this moving average. Here is the daily doing exactly that pattern. If we were to turn it back a little bit, you'll see that we went sideways into this angle, and now it's flattening out, and it looks like that we're getting some downside, but this upward slope 21 that's coming in through here is likely to hold that up over the next several days. We do have some new Fibonacci targets downside: 33,909, 33,122, and 32,637. So we definitely have this thing coming down into that pattern, and it's a rising pattern. And ultimately, we may stair step this thing back towards 31, 32.5, 31.5. And then, but you can see the PPMs then as we come into the third week of November, that where we'll probably get some stability here. And it's pretty much, this is what is going on from the standpoint of a lot of charts here. Some of them are inverse, but we're seeing a lot of these patterns that are just trying to come in and move sideways into some of these support levels, more on the intermediate level. Like I said, this is really the pattern to watch, and the market grid should start to collapse around it. basically it's a volatility crunch, that should come into play. Okay, folks, that's going to do it for tonight. Hopefully that was interesting. Make sure that you get signed up for the seminar if you come. There will be a recording of everything, and it will be offered down the road. I'm not sure how long it's going to take us. We're just had a meeting actually today on how we're going to record, and we're going to put it in modules, and it's going to be in a platform that we can get access to. So the goal is to do a really, really good job on this thing, as structured as possible, so it's something that has some long-staying ability to help people to build some of these things that I'm looking at helping you to build. So you'll see the front end of the seminar starts off with just basically psychology, talking a little bit about my journey and some of the things happen, why some of these indicators got done, built, and what they served as a purpose, and going through the life. Some of these things like the PPMs we developed in 1984. That's a funny number because of the book in 1984. But that's when we actually did some major work, the angle of attack, the moving average work, and then it's been developed over the years, over decades, into trading models and portfolio management systems and all that. But I'm going to be going through the exact suite of indicators I use and how to set up. I'm doing a whole, probably better part of an hour plus on just on day trading. There'll be set up on swing trading, and then intermediate analysis and doing longer term trading, and basically showing you how I set up my daily, when I go through the charts like I did tonight, how that mentality and how to basically take multiple time variants and compile them into an answer that is actionable. So anyway, I hope you folks come. KendallReport.com/event, or you can go, I think you can go to that QR code. I'll put some stuff up on Twitter here in the next couple of days, so hopefully we'll see you there. Anyway, folks, as always, just remember, no video on Thursday night like we usually do, so it'll be tonight, Monday night, Tuesday, Wednesday, and then next week I'm gone, okay? So anyway, folks, see you tomorrow night. Thanks for watching. Good day. Have a good day trading. See you. Yeah, Jeffrey, I don't have to do anything. My clock never changed. Anyway, have a great day trading. You're probably right, FF. Hey, Jeff Harden, we should hook up again sometime. Send me contact info again to info@KendallReport if you would. Probably will be a couple weeks out, but I would like to talk. Poor Peter. That's a good question, Stephanie. I'm not sure. It's pretty close. I think Peter, because he actually manages money, or tries to. His funds are terrible. Okay, I didn't even know Harry had funds. That's hilarious. All of Peter should be delisted. All right, folks, have a good night. See you tomorrow. Very funny stuff. All right, folks. See ya. Shutting her down.